Have you ever stared at a dropping stock price, heart pounding, telling yourself, it'll bounce back, it has too, only to watch it sink even further? Or, B, you've held onto a winning trade way too long, greedy for more, and then watched all your profits evaporate in a flash. If that sounds familiar, you're not alone. This is the emotional roller coaster of trading, and it's where most people lose their hard-earned money. But what if I told you there's a way to get off this roller coaster? A way to take your emotions completely out of the equation and make decisions with the cold, hard logic of a machine. Today, we're diving deep into the single most powerful strategy to protect your capital and lock in profits: automating your exits. So, what exactly does it mean to automate your exits? It's simple, really. It means you decide your exit points before you even enter a trade. You set up orders with your broker that will automatically sell your position when a certain price is reached. These are your safety nets and your profit targets, set in stone when your mind is clear and rational, not in the heat of a volatile market. The two most common types of automated exits are the stop-loss order and the take-profit order. Think of them as your pre-programmed escape plan and your victory celebration, all set up in advance. Let's talk about the stop-loss first. This is your ultimate defense mechanism. A stop-loss is an order you place to sell a security when it reaches a specific, lower price. Its job is to limit your potential loss on a position. For example, let's say you buy a stock at $100 per share. You've done your research, and you believe it's going up. However, you're also a smart trader, and you know that anything can happen. So, you decide the maximum you're willing to lose on this trade is 10%. You would then set a stop-loss order at $90. If the stock price unexpectedly drops to $90, your broker automatically sells your shares. You take a small, manageable 10% loss, instead of potentially watching it fall to 80, 70, or even lower while you're frozen by indecision. The stop-loss acts as your unemotional circuit breaker. It doesn't hope, it doesn't pray for a rebound, it simply executes your plan and protects your capital so you can live to trade another day. This is non-negotiable for serious traders. Now for the fun part, the take-profit order. This is the flip side of the coin. A take-profit order is an instruction to sell your position once it hits a certain, higher price. It's how you lock in your gains automatically. Let's go back to our stock bought at $100. Based on your analysis, you believe a realistic target for this stock is $120. So, you place a take-profit order at $120. If the stock rallies and hits that price, your shares are automatically sold, and you secured a 20% profit. Why is this so crucial? Because of greed. Greed is just as dangerous as fear. When a stock is climbing, it's so tempting to think, maybe it'll go to 130, maybe 150. You cancel your plan and hold on, hoping for more, but markets are fickle. That surge can reverse in an instant, and your paper profits can vanish. The take-profit order forces you to stick to your original, rational plan and actually realize your gains. It turns a good idea into actual money in your account. The real magic happens when you use these two orders together. For every single trade, you should have both a stop-loss and a take-profit target in mind. This creates a defined risk-reward ratio. In our example, you are risking $10 per share from 100 down to 90 for a potential reward of $20 per share from 100 up to 120. That's a 1:2 to risk-reward ratio. By defining this before you even click buy, you ensure that your potential gains are greater than your potential losses. This is the foundation of long-term, profitable trading. You're not just gambling, you're managing risk systematically. You've built a logical framework around your trade that protects you from both fear and greed. So, why is this automation so critical, especially during market volatility? Because when the market gets choppy, our brains go into overdrive. The amygdala, the fear center of our brain, takes over. We experience a fight or flight response. When prices are plummeting, the flight instinct screams at us to sell everything, often at the worst possible moment, locking in a huge loss. When prices are soaring, our dopamine levels spike, and the fight for more profit kicks in, making us greedy and reckless. We are biologically wired to make terrible financial decisions under pressure. Automated exits are the antidote to this. They are the logical plan you created when you were calm and objective. By setting these orders, you are essentially trusting your rational self over your emotional self. You're letting your pre-planned strategy play out, shielded from the panic and euphoria of the moment. Let's consider a real-world scenario. Imagine the market opens and a negative news report causes your stock to drop sharply. Panic sets in across the market. Without a stop loss, you'd be watching the red candle grow, your stomach in knots. Should I sell? Should I wait? Your mind races. You might freeze and do nothing, leading to a devastating loss. Or, you might panic sell at the very bottom, just before the price recovers. Now, imagine you had a stop loss set. The news hits, the stock drops, it triggers your stop loss, and you're out. The loss is contained, exactly as you planned. Your emotional turmoil is minimal because the decision was already made for you, by you. You can now calmly reassess the market and look for your next opportunity with your capital largely intact. One advanced technique you can use is a trailing stop loss. This is a dynamic type of stop loss that moves up as the price of your stock moves up. For example, you could set a trailing stop loss at 10% below the market price. If your stock, bought at 100, rises to 110, your new stop loss automatically adjusts to $99, 10% below 110. If it goes to 120, your stop is now at 108. This allows you to protect your profits while still giving the stock room to grow. If the stock then pulls back and hits 108, your order executes, and you lock in an $8 profit per share. A trailing stop loss is an incredible tool because it lets you ride a winning trend for as long as possible while still having a safety net that is constantly rising to protect your accumulated gains. So, how do you start implementing this? It's incredibly simple. Log into your brokerage account. When you go to place a trade, instead of just using a simple market or limit order, look for the advanced options. You'll see fields for stop loss and take profit. Some platforms call this a bracket order because it brackets your entry price with a high and a low exit point. Before you enter any trade, do your homework. Determine a logical price for your stop loss based on technical support levels or a percentage you are comfortable with. Then, identify a realistic profit target based on resistance levels or your desired risk-reward ratio. Enter those values when you place your trade. It might take an extra 30 seconds, but those 30 seconds could be the difference between a small, controlled loss and a catastrophic one. To be a successful trader or investor over the long term, you have to treat it like a business, not a casino. And the most important rule of business is to protect your capital. Automating your exits is the most effective way to do that. It removes your biggest enemy from the equation, your own emotional impulses. It forces discipline, enforces risk management, and allows you to systematically execute a well-thought-out plan. It lets your logical brain from yesterday make the decisions for your emotional brain today. Stop letting fear and greed dictate your financial future. Start automating your exits and trade with the confidence and clarity of a professional. Thank you so much for watching. I hope this strategy helps you become a more disciplined and profitable trader. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe and hit that notification bell so you don't miss our next video. Let me know in the comments if you already use automated exits or if you plan to start. I'd love to hear about your experiences. Trade smart, and I'll see you in the next one.